Well, very good afternoon, everybody. Welcome to REDeFiNE Tomorrow 2025 again. And welcome to this fireside chat about navigating the crypto derivatives market and strategies for volatility. My name is CJ. I'm going to be your moderator for today. I'm the managing director and head of sales at GSR Markets. We're a global market maker. I look after APAC and EMEA regions. I'm based out of Singapore. And with me, I have a distinguished guest, Eugene Kwok, who's the CEO of QCP. So,
No, I'm not the CEO.
oh, really? Well, run with it. I
Yeah,
think we can work with it.
I'm the business manager to the CEO. But yes,
Okay, fantastic. Well, why don't you tell the audience a little bit about yourself, sir, before we go into the content for today?
sure. I'm from Singapore, where QCP is based. CJ's mentioned. I've been at the company for quite a while now. I've been at the company maybe like 6.5 years. So I've actually seen QCP grown from maybe like 10 plus people to now we have about over 140 people across multiple jurisdictions. So I think it's been a real journey for me seeing not only how the company has grown and how its focus has evolved, but also how the space has changed. And I think we're gonna dive a little bit more into that today. But as for QCP, what we do, we are Asia's leading digital asset partner. So we help investors all over the world with their investment strategies and decisions. So we do everything from simple on and off ramps to derivatives to structured products. And I think our strength is we help clients really tailor their strategies, our strategies for them. So yeah, that's QCP in a nutshell.
Fantastic, and appreciate the introduction, sir. So diving right into it, and I'm glad that you mentioned how long you've been there. Obviously, it does show us that you're one of the OGs in the space, especially out in Asia. Uh, Obviously, over this time, you've seen the crypto derivatives landscape evolve. And I think the evolution has been nothing sort of meteoric, so to speak. How would you compare that landscape on a fundamental level if we were looking at it from when you started at QCP versus what you see now in the markets?
Wow. Okay. So I think before we start, let's just let's define this derivative landscape, right? So with derivatives, we're basically talking about like delta one derivatives, like perps, like futures, and non-linear derivatives like options. So I think first of all, we're seeing a lot more participation across the board. Previously, when we first started, right, it was kind of cowboy town, right? We saw the space being dominated by crypto native traders, market makers. But now I think we're seeing a lot of broader engagement from traditional financial institutions, retail investors, even like systematic funds. And this has been driven by a few things. Firstly, I think there are a lot more regulated venues. You know, you have your CMEs, you know, even your Eurex, and even from an infrastructure standpoint, right? There are so many more exchanges offering sort of more robust APIs with block trading protocols. You see the growing availability of structured products, something which QCP, well, we specialize in. And if you're talking about the change, I think that the change is really a more liquid, transparent, multifaceted derivatives ecosystem where there is just so much more offering and accessibility.
Okay, fantastic. Well, so to speak, you mentioned about that convergence and that approach from traditional finance looking on in and getting a bit more involved in it. And obviously, this convergence, we've seen it as accelerating in the last couple of years. With regards to QCP, then, I mean, how do you approach this from a risk management and pricing differential from traditional derivative markets? And especially given the fact that crypto as an asset class is 24/7.
Uh, wow, I think we don't. We've so for example for QCP, right? We've always behaved like a regulated staff, you know. And right now we're on the road to get two licenses. So I think we've always tried to employ like sort of best in class risk management in our strategies. And if you come to our office, right, a high chance
Mm.
you see our head of risk, last person out the door of the office. I remember, you know, him looking a little bit younger before, but I mean, I agree with your convergence point very, very much. Back in the day, we when we go to conferences, right, and I'm sure you've seen this too, we were able to tell who the crypto natives are, you know, straight away. But
Mm.
now it's hard. It's hard to tell, right? We've got bankers talking to us about metaverse, you know. On our side, we're talking about tokenization of assets, right? So I think from to answer your question, I think from a risk management standpoint, we don't really differ. We try and employ best in class, just like traditional assets. And maybe later on we can dive deeper into how exactly and what we look for, or maybe the certain idiosyncrasies or small slight differences, right? But generally we don't, and yeah, even from a hiring perspective, I think we see the convergence a lot. But when QCP has grown now, before that, it used to be just a bunch of crypto natives, right? But now we
Mm.
see diverse hires from all segments of traditional finance.
Fantastic. And what, in your mind, what do you think is driving this shift of traditional? And I'm not going to say that an outright mesh within our space, but what do you think is driving this institutional approach, adoption, and even visibility towards derivatives within the space?
Wow, many things. I think firstly, we just need to clarify that, well, the use of derivatives, right, is most definitely not a crypto specific thing, right? I mean, I look at it from the angle that it's just a reflection of broader capital markets behavior. It's just how people allocate, right?
Mm-hmm.
And I think generally people use derivatives for the benefits they bring, right? I mean, yield, leverage, risk management, and we see it, right? Whether it's an equity desk trading S&P futures or a macro hedge fund managing duration risk, like by interest rate swaps, the logic is the same. We use the most capital efficient instrument to express a view or to manage exposure. But maybe let's talk about the increase, right? You mentioned increase, like why has there been such an inflow? I
Yeah.
think we we spoke about how the market structure has matured. I mean, tools have become a lot more accessible. And I think as more institutions just kind of gain exposure, it's only natural that derivatives grow. Like, yeah, I don't know. To me, it's like it's just market logic catching up with infrastructure, and derivatives are just simply the instruments of choice for sophisticated participation, right?
No, I fully agree with you. I think where there is an open field, people naturally go there to look to build something. It's just how it works, right? And I think we are definitely seeing that in this space. The evolution has been manic, if anything. I think it's been helped along by the ETFs for sure, as well as the funds looking at this space, the likes of your asset managers like BlackRock of the world. I think it makes a big difference, right? When you direct investor interest, naturally everything tends to evolve. But yes, I fully agree with you. So switching gears a little bit here, right? And back to what you were mentioning earlier on, and I would love to dive slightly more into this, and definitely the floor is yours for this. You mentioned the way QCP adopts it is a best-in-class risk management approach, right? And I think that's crucial. And my background is actually derivatives. I used to be a multi-asset structure on the trading floor. So derivatives is my bread and butter. So I appreciate your comment and your approach that risk is everything in terms of how you look at it and the nuances there. Could you elaborate a bit on how QCP looks at it and the measures that you have in place as well?
Okay, I'll try. I'll try my best. I don't know if I can get too detailed, but I'm gonna try.
No worries.
So I think that a lot of the traditional finance risk management techniques and methodologies, right? They do apply in the crypto space with a few like minor tweaks, obviously. But generally speaking, I mean, for example, industry standard, right, for VaR, right, as
Mhm.
sort of like a risk management metric is very pertinent to digital assets. But I think that the extreme volatility in crypto is not a phenomenon that is completely alien to TradFi markets, right? I mean, we think about like jumpy prices around earnings and dividend announcements, or even near-end shocks with commodities, right? But in crypto, I guess it's just even more violent, you know.
Yeah.
So it does have implications with regards to our risk vigilance and monitoring. So I think for us, what we do, just to get into a little bit more detail, we employ a lot of like real-time surveillance. We do a lot of horizon scanning and monitoring. We automate a lot of our alerts and triggers. We accommodate sort of like limit structures and risk frameworks to sort of better handle the volatility. I think you just got to be ready for jumps, right?
Mm.
And for us, we try to be as data-driven as possible as a firm. So I think that in managing this risk, right,
Mm.
our infrastructure, our tools, the people, the mindset, we all have to be in sync, you know. And I think
Mm.
leadership has been great in sort of promoting sort of a risk culture like throughout the firm.
Fantastic. No, I appreciate it, and I think it's very, very important. Risk is the backbone of everything when it comes to a trading shop, and I think the way you guys have managed to deploy it with your leadership, I think has been crucial for the length of time that QCP has actually been around in the market, especially in Singapore. Uh, so leading on to that concept of differences and more specifically to the topic at hand, which is really about volatility and the strategies looked at within the space right now, how would you, if you were to pick a point, compare the volatility and the nature of the volatility now compared to, let's say, 4 or 5 years ago within the space?
4 or 5 years ago. I don't know. I
I-
mean,
I'm
we
giving you
we
I'm giving you
we
1 year to settle into QCP because you're there for 6 years. So I assume that 1 year worth of settling it, then you would have had a viewpoint then compared to now.
sure, sure. Okay, well let's talk about it from the beginning, right? If we look at 2017 maybe to 2020, right?
Yep.
Uh, we saw that open interest spikes were really often driven by directional retail speculation, right? We all always, when we were there, you could tell the space was always been over leveraged. It's always very reactive. We saw a lot of like
Hmm.
crowd reaction from Twitter, from Reddit, and usually with like significant leverage, right? Think about it. This was during the BitMEX days, 100x, and there was little sort of institutional balance. And but I think this time the composition is notably definitely more institutional, as you've raised, right? We're more hedged, and in many cases, we see so many institutions a lot more delta neutral. I think we sort of see more sophisticated flows, right? Funds running basis trades. A lot of our clients also ask for those kind of trades where it's really risk managed, right? Um, we that's like ours. I mean, we do a lot of accumulators. We do a lot of principal protected strategies. Miners looking to lock in prices, long-term holders sort of using options to enhance yield. So I think that, well, I'm trying to think of an eloquent way to put it because you're asking me of the change from now and then, right? I think
Yeah.
while open interest is high, I think quality of the positioning is more mature. It's more vol selling, more risk dispersion, just more two-way flow. And as much as this doesn't eliminate downside risk, it does seem that this cycle has really much deeper institutional roots and it's less like reflexive lah, compared to previous ones.
Absolutely fantastic. And in full agreement, similar to yourself, I've been at GSF for about 5 years, so I have was on the tail end of that shift. We've noticed the exact same thing, so I love it. It looks like we're looking at the same things out in the Southeast Asia, which is great, isn't it? Uh,
Ah,
Interesting enough, you did mention one point, and it's something I want to touch on because I fully agree with you. Leverage in this space has sometimes gotten completely out of hand, right? We've seen it by the washouts, we've seen it by the liquidations that occur. We used to call it in traditional finance fat fingertip syndrome as well sometimes, where just something happens, you just can't believe what the wick looks like on the charts when you look at the underlyings. Would you say right now, and what is your viewpoint when you look at leverage within the space? Would you say we have a much better handle on it right now, or would you say it's still something that we need to learn a bit more about within crypto derivatives?
I think it's both, right? As much as we touched that, there's a lot more venues and a lot more access to these more risk managed strategies. But I think that from a retail perspective, there's still quite a lot of education that needs to be done, right? Um, but I think as institutional flow does that, I only think it will improve. But if we think about what could help them educate themselves, right? Sometimes it's difficult. These structures are sometimes complex, and we find that as QCP, our job is to really help the client navigate through these complex spaces, right?
Hmm.
So when we describe strategies, we really try to sort of educate in the process. Sometimes the space does that for you. I don't know. Do you remember 2 years, 3 years ago, there was the trend of DOVs, DeFi option vaults. Were
Yes,
you?
correct. I mean, there are a bunch of them, right? A bunch of them out of Singapore as well. Now they're running their own perp dexes, but yeah, there was.
Yeah. So I'm trying to link it back. I'm trying to link it back to your question, right? So when you think
Yeah.
about EOVs, right? I mean, we look at them now. They're kind of dead right now, right? Um, but they did affect the derivative landscape in a way, in terms of education, in my opinion.
Mhm.
Because you see, when DOVs like Ribbon and all they first launched, they gave crazy, very high attractive yields, right? 10 to 50%. And they did this by sort of automating strategies like simple vanilla covered calls, right? Or puts.
Mhm.
And then when capital kind of flowed in, the strategies became crowded and there was like lower premiums. But actually what they did was they helped with education because in a way, because they simplified the UI. people
Mm,
sort of saw the DeFi structure of vaults, just adding capital to vaults. And what happened was, oh, I get 20% yield. They didn't have to look at the complex order book. But
mm,
I believe that through that process, people were more educated, at least in terms of vanillas. Like
mm,
what is actually happening? Oh, when after the contract ends, it expires worthless, so I get the premium, and it's like simple terms just because it encouraged them to participate, right? And for us, I think that's kind of what we try and do for our clients, right? We simplify, we tailor really the positions and explain it to you. So I think to answer your question, it's really both. There's so much more education to be done.
mm.
Um, but I think that the way that the market and the way that crypto innovates, sometimes it just doesn't wait, right? It just
No.
goes, like now that trend is over, it's dead.
Yeah. No, I fully agree. It's an interesting one, and let's look at it because you did bring up DOVs. DOVs were very interesting because they filled a niche in the market that we took a feather out of the cap of traditional finance and said, look, within this space, how can we do something very similar, right? Uh, my question to
Yep.
you then, and this is going to be more of an opinion than anything, in your mind over the last 5 years, what has probably been the greatest innovation we have seen when it comes to crypto derivatives? Or not even the last 5 years, just within the crypto markets as a whole. And the reason why I'm asking this is because a large part of what we see in a space, and you mentioned it earlier, which I fully agree with, we're not reinventing the wheel. We're trying to take what is there and how
Yeah.
do you apply it as an underlying asset class? And eventually, is there a world where we see forward vol, etc.? Maybe, right? But in your mind, crypto derivatives themselves have had an evolutionary phase. What would you say is the product that stands out and says, well, this is crazy. Like we wouldn't have seen this in traditional finance.
Wow, I don't know. There's so many things that if we look at it from a pure innovation standpoint,
Mm,
I don't think we've seen real much. Like you rightly mentioned, we're not reinventing the wheel. We're just taking these strategies, right? I mean, we look at the most popular strategy that has been going on, right? A lot of people doing basis trades, cash and carry. That has been going on. I'm not
mm,
reinventing the wheel, but I think it's more access. Because before, a few years ago, when you are a Bitcoin holder, you hold Bitcoin, right? In your wallet. It's not so easy to just generate good yield,
mm,
you know. And so, but now, if anyone is out there doing this, please talk to us. We have many ways to help you do that. So I think now it's a lot of access, right? It's opportunities, access. There's a lot of these strategies that were before it, but now they're available. So I think, yeah, a lot of it's more accessible, and you can think of it from an infrastructure standpoint too. The market is just more efficient in that way. There are more sort of counterparties that will be able to do that with you.
fantastic. Well, you also mentioned earlier on, which I loved, that in your mind, the direction that we're going to see derivatives go and something that at QCP you pride yourselves on is actually the world of structured products. Structured products in themselves, in a nutshell, is never the easiest thing to do, right? Be it the mechanics of how it works, the operational assessment. How do you see structured products evolving? Are we going to marry and follow traditional finance, or is this going to be something that's going to remain more or less completely bilateral, dare I say it, on an OTC basis?
I think so. I think structured products are only going to grow, right? And we're going to see people do cross-asset stuff as well, right? I mean, people who use structured products are kind of more sophisticated. So, but I understand when people say that because in the past, like access was always hard. But if you boil it down, right, all structured products are just, it's like a financial recipe. We're just taking bits to craft the dish that you want. So if you think about it, if I want to hold Bitcoin for a long time, I want to pass Bitcoin down to my son, what do I do, right? There are a few structured products can do that, and it's if you take time to learn about them, they're not really rocket science if you understand them from you don't have to know exactly what's happening underneath the hood, right? But when you boil it down, the goals are the same. I want to hold Bitcoin, I want to accumulate Bitcoin. Okay, let's look at an accumulator, right? I'm just buying Bitcoin at a discount, you know. If this happens on this date, if Bitcoin price is here, this is what happens, you know.
Mm.
So I think structured products are gonna definitely grow, but it's not, I don't think it's specific to just crypto. I think people are just gonna use it as an instrument when they trade and when they do to manage their positions.
I mean, you also mentioned, so I love it. You brought the concept of cross assets. And cross-sats is, if you think about it, this is the promised land of what crypto derivatives can ultimately become. And the reason why is if you price a correlation correctly, you have an asset class where its volatility is multiples out of every other asset class around. My question then becomes, and your viewpoint on this, where when we start breaching into other more traditional finance-based assets, for lack of a better term, we're also have to be very mindful from a regulatory standpoint. How do you think that's going to evolve?
Wow, it's tough, right? Because I mean, I hope that there's going to be a lot more regulatory sort of clarity. Um, yeah, we see the difference, right? From sort of in Asian countries and Western countries. You know, Asian countries a lot more fragmented, right? But I hope there's a lot more regulatory clarity and tokenization, like in the space in general. Um, I think people are still figuring it out. We are lucky in terms of us being in Singapore. I think we've got good clarity over here. I just hope that everything can just sort of come more together as a space.
Love it. Well, no, and I agree with you, and I think that's what we're hoping toward, right? We're seeing a lot more governments become not regulatory savvy, but regulatory open, and I think that's where we're going to take the direction going forwards. And I love the fact that we're aligned on that. So more to QCP and understanding how your outlook is on this space, and obviously being around the leadership team for so long, it gives you a very intrinsic understanding of what excites you within the organization. If you were to right now put on that QCP business hat looking forwards and where you're going to go from here in terms of that derivatives market. What about the derivatives market in 2025, 2026, the foreseeable future excites you?
Wow, what excites us? I think for us at QCP right now, our vision is that Bitcoin is going to be on every balance sheet, every portfolio, every treasury. I think in the last year, we've seen the Bitcoin narrative come across really strongly. We've seen more sovereign wealth funds get exposure. We see more governments talk about Bitcoin. So I think that's going to be a huge narrative for us as a firm, right? We look at Bitcoin in a way that it changes the way a lot of businesses kind of even look at things like credit, you know. Um, so I think we're going to see a lot more adoption when it comes to that. And for us, obviously, we we think that structured products is the way to go, right? Especially for more sophisticated investors. I think that's a huge one. I don't know. Do you buy into the strong Bitcoin narrative? I mean,
I,
we've all seen it, right?
I think Bitcoin stands for something within this space, right? I think Bitcoin has been that ray of light for evolution. When you see how perpetuals developed, when you see how ETFs has come about, right? It was always the leader in that space. I'm in full agreement. I actually see it as an asset where sovereign wealth funds can look at it and say, yeah, I'm comfortable putting this with me. I'm comfortable holding that. And I think there was an article the other day I was speaking about the number of Bitcoin treasuries in the space, which is absolutely, it's ballooning multifold, right? So I do see a lot of value there. And interesting, I want your viewpoint on this one as well, because you did mention Bitcoin. And I think that's something that between us, but both from trading shops, we look at it and like, yep, Bitcoin, that's the gold standard. That's easy, right? That's if you were to akin it to the days of sales and trading, that's like being able to write options on euro dollar or dollar yen. It's there. We know it's there. The market is there for that. Do you foresee or do you envision exponential growth within altcoin options as well?
I I think that you've touched on a good point, right? Because most options right now they're just concentrated, right, on Bitcoin and ETH. We do see some venues that are making options altcoin options kind of more accessible. Um, I feel like who knows, right? But if I were to, I mean, I don't like to speculate, but we see that, I mean, obviously it's the next logical step, right? Um, we see a lot more demand in yield for Solana but right now, I don't know. Are they priced well? Are they priced efficiently? I think it's more participation and institutional participation increases. For sure. I think altcoin options will see a growth in that too. I think it's just logical to me.
Fantastic. And you did mention prior that within QCP and within the long story history you have within Asia, you mentioned that logic of sovereign wealth funds, corporates, FIs looking at this space. especially as an organization which has deep roots within the APAC region. How do you see regional differences, be it within Asia itself and Asia versus the rest of the world?
Wow, regional differences. Okay, I think that there are a couple of ways we can look at this question, right? I think from a trading standpoint, we see if you look at time zone and flow dynamics, we definitely see a difference. If you're trading actively, I mean, for Asia, more active, right? During late US night, early EU hours. There's more strong sort of retail and prop desk presence, perp altcoin options. They traded more aggressively here. You know, I don't know if you agree, but this one flows could be, I don't know, tend to be a little bit more speculative. I don't know, short dated option rotations. I'm if we look at the West, right? I think it's a lot of institutional flow. There's a lot of emphasis in sort of macro linked positioning
Mhm.
um, with with ETFs and things like that. But from another perspective, I mean, let's look at it from also regulatory environment, right? I mean, we briefly talked about it just now, how in the East it's just more fragmented. In the West, there's a lot more regulatory focus, right? With SEC, CFTC, they drive sort of the narrative and the usage of regulated platforms, around the world. But I mean, the East and the West, we're always going to have our differences, right? And for a lot
Yeah.
of times, we depends on the narrative, and hence we take lead from each other, right? I mean, a lot of us in Asia, sometimes we as crypto is tied so much more to macro. I mean, the West is going to have a lot of influence in that, right? Um, for sort of stablecoin adoption, regulatory stuff. Maybe it's the other way around. I don't know. But I feel like it's very hard to predict it because it's just so complex.
Mhm. Fantastic. And we touched upon it very lightly, where QCP's approach to risk management, the market risk manager being the last guy out the door. I love that, right? And that is very associative of how do you defend. Uh, and obviously at QCP, you have been through multiple market cycles. Do you think that there's anything different in terms of the robustness of the current market? Would it be able to withstand more than what we saw historically? Or do you think it's going to be a situation where once bitten, twice shy, and we're just going to keep going in circles like this?
Uh, I I I feel like I'm gonna agree with you that I'm successor, So I do want to believe that it's gonna be a lot more robust, right? Simply because um right now the cycle, we've mentioned it a few times, is just very institutional, very insti heavy. Um and I think but the way that they participate is really more in structured vehicles, right? ETFs, and I think their capital is also more patient. Um And also with volatility being sort of more aligned with traditional markets, right? We right now we look at rate expectations, we look at CPI prints. If you guys you're not subscribed to our market color, please do. We give all these color out all the time. So
Brilliant.
institutions hedge like crypto alongside other risk assets. So I do believe that it's going to be more robust, for
I
sure.
love it. I love it. Well, don't worry, sir. You're almost at the end of it with me right now. I'm not going to put you on the spot that much. I am actually going to end off with a question where I think you will enjoy the most. What upcoming initiatives, partnerships, developments should our audience know about from QCP? And also, do let the audience know how they can connect with your team to learn more about the solutions that you provide.
Sure. I think for us, what I'd like people to know, right, is that for a long time in the past, people always saw us as either like, oh, they know us as the options guys, and they think of us as like a prop shop, right? But we're completely not. I think we are at the core of the company. We are very, very sort of client focused. We are a client first company. So I think s- I'd like people to know that yeah, we can actually help people with multiple solutions, right? Everything from very simple to more sophisticated stuff. And for us, we really pride ourselves with having high touch service and really understanding your needs and also catering whatever tenor, whatever strike barriers. Like if you want more complexity, we can do it. And Yeah, I think for a lot of people, I don't know if you know that about us, you know. And I think for us, that's something that we've been really focusing on. To reach us, it's very, very, I think we're QCP Group on all social channels. QCPgroup.com, email sales@qcp.capital. We're pretty easy to find. And yeah, looking forward to having more conversations with you guys on the side about all these things.
Fantastic. Well, there you have it, ladies and gentlemen. I hope it's been a very informative discussion, finding about where this market has come from, where we are now, and actually where we think this is going to go. With that, thank you very much for your attention. And thank you very much, Eugene.
Thanks, CJ. Thanks, everyone.